Today, we got a really special topic. One would say might be the most important topic ever. And that is the number one thing that makes cities appreciate in real estate, to just like break the pattern of real estate appreciation. We've talked for a while about the importance of downtown, but I challenge this guy. I challenge you, sir, to give me better data. I don't want to just know if it happens. I want to know how and when it happens. And old Genius Concepts over here has brought up a doozy for you. Welcome, everybody, to your weekly edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. With me, as always, the man that I affectionately like to call GC because he's got the genius concepts. He knows how to generate cash flow. He's a great co-host, and because his name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Fantastic to be with you all.
All right. GC.
Yes.
1 week and 3 days till Summit. Let's tell them a little bit about what they have in store for them.
Guys, we told you that we were going to do Summit better this year. We're keeping it smaller, as small as we could keep it, and we were going to do it better. And we're so excited to have you all here because it is going to be better and better.
It's going to be awesome. Oh, it's also officially sold out.
Oh, yeah, that's right. We did
Also
officially sell out. So thank you all for your support. You guys made a great decision. All of you, all 100 of you that are coming here for Summit, you're going to have a blast. And we couldn't do this without you. So thank you all for your support. Can't wait to see you. Let's tell them a little bit about what they're going to see. Where do you want to go?
Well, I mean, we're talking about downtowns today, so I think we should just talk about the pièces de résistance of the Summit, as Reggie Fonse would say. The downtown, we have a downtown panel, and we have a downtown tour. So you're going to be seeing, for those of you who have been to past summits, things are still changing. Like it is so clear to see the growth of this city. And it's one thing to see it, it's one thing to believe it, right? So like you're gonna see it and believe it by walking through all these changes. For those of you that are new, we're gonna give you the full historical context of everything that's happening, the story from the ground up, and then you're gonna meet the folks that are actually doing this stuff. We have a expert panel happening at the Summit as well. You want to tell them about that, GC?
Yes, we have 3 expert panelists of those who are making key decisions, spending billions of dollars in downtown Jacksonville, and you're going to get to ask them questions, shake their hand, get inside the minds of those who are making these big moves that are affecting your Jacksonville investments. We're going to have Lori Boyer, who is the CEO of the Downtown Investment Authority here in Jacksonville.
Past star of the show, Lori Boyer.
Past star of the show. Super
Sharp
amazing lady. Oh,
yeah,
amazing
sharp
lady. And the Downtown Investment Authority is basically the decision-making body for how these downtown projects happen and how incentives get approved along with city council. But she is one of the folks that is the most influential in how our downtown is being formed. So super excited to have her here. We're also going to have Brian Mull.
Past star of the show, Brian Mull.
Past star of the show, Brian Mull. You're seeing a trend here, right?
Yeah.
Brian is the CEO of Gateway Jacks. And Brian is the person that we convinced to leave his incredible job building Amazon's HQ2 up in Crystal City near DC to come to Jacksonville to lead Gateway Jacks. JWB set up the Gateway Jacks opportunity by acquiring all the land downtown. And we said, listen, this is way too big for us to do. We needed to get an expert to lead this downtown redevelopment project. And Brian is that expert. So he leads a team at Gateway who is in the process of developing $2 billion.
$2 billion.
With a B, $1 billion worth of downtown redevelopment. You're going to get to see all of this downtown redevelopment on the tour as a part of Summit as well, but you're also going to get to talk to Brian. So Brian's going to be here, incredible leader. We are so blessed to have Brian here at Gateway and in Jacksonville. Yeah. And the third is my business partner, our president, Alex Afakis, is going to be there, and he'll be sharing his insights as far as how Gateway Jacks started, right? And how does JWB's investments relate to what is going on in downtown Jacksonville? So between the 3 of them, it is one of the most powerful panels that you'll find, especially for downtown investment discussion. So super excited. And then after that, guys, we get to listen to them, and then we get to go see.
Take a walk.
We're going to go on a downtown walking tour. It'll be walking and it'll be a little bit of a riding tour as we go and we see in action all of these buildings that are either going up or soon to go up. And for those veterans of the Not Your Average Investor Summit who have been here 3-4 years in a row, your minds are going to be blown. Those things
changed.
that I was telling you is going to be there. And some of those places, they're there. And some of those places, it's rented, and it might be a commercial lease. It might be a restaurant. It might be, a wonderful mixed use building where there's people renting and living, and you're seeing this happen, guys. This is just the beginning. So can't wait to share it all with you. And we are, 10 days away?
10 days away.
10 days away.
All right, GC. We have been talking. Oh, and Charity Graham, of course. Charity's back. Good to have you, Charity. We've been talking for a while about the impacts of downtown, the crossing of the 10,000 person threshold, all these different things. But like I said, I have challenged you to go into the research, and we are just in this like scary moment in time right now, right? Like it feels like it's tough to invest in just about anything, and with so much things changing, to like make this commitment to a 20-year thing might seem daunting at this moment in time. But I challenge you to dig deeper into this idea of like downtown is coming, and give us some real signals into how this effect happens in cities. You think you found something good? I
do.
Yeah?
I do. You have put me on some wild goose chases lately, and they have returned some pretty amazing insights, right? Guys, we've been doing the show for 5 years. Like the basic tenets of why we think this is such a great investment don't change, right? But there is a reason why we have 5 years of shows that I think are pretty awesome, don't you?
Yeah, that's
right.
right.
And it's because we constantly search for either better data or more perspective, or put it all together, or make it simpler to understand how you can take action. And so that was my mandate from the boss over here. He said, make this more, get better data, but make it simpler, make it easier to understand, so that people can understand what is a big opportunity, how do I evaluate a big opportunity, and when is the time to take action. And when we look at some of these downtown case studies, which we put together, you're going to see clear trends that emerge that help you know not just how big of an opportunity a revitalizing downtown is, but when does it really take shape, and how can you benefit from it as an investor?
I'm excited to get into it. As we have talked about, right? Like this idea that these like great cities that we all wish we would have invested 10, 20 years ago, Austin, Nashville, right? Like these like cities that have just blown up, all have this like downtown emergence happening. But what some of you may not know is that, was it 10 years ago, 20 years ago? When was it? Like,
are you talking about 2005?
2005.
Yeah.
In 2005, Jacksonville was worth around the same or more than some of these cities, right? So like we're going to dig into the nuance of all this stuff, and GC put together a really nice storytelling presentation. Real quick, we're getting a couple questions about Summit. We will not be recording the Summit or broadcasting it live. That is, it's only for folks that can come. We're trying not to take away from the intimacy of it. You will be missed, Leo. You will be missed, Justine, but not feasible, just in order to make the live experience as intimate as possible. And real quick, do we want to just hit on Shake's question about hurricanes in Jacksonville?
Sure. I don't remember exactly what the question was, but at the end of the day, no matter where you invest, there are natural disasters that you need to take into account, right? And there are a couple of things about our presence here in Northeast Florida that protect us from hurricanes. We actually haven't had ever had a direct hit from a major hurricane here in Jacksonville. And we haven't had any type of direct hit from any hurricane since 1964 here in Jacksonville. Knocking on wood every time we say that. So there's some good things to keep in mind, but here's what else you should keep. Here's what gives me peace of mind, owning 400 rental properties here in Jacksonville, and the over 3,000 properties that we manage. Many of those who are listening now own rental properties with us. The things that help them keep, have peace of mind at night. Number one, insurance. Okay, insurance is there to protect you. The good thing about hurricanes is you do have a little bit of a warning, so it is something you can actively focus on those measures to protect life in that situation, which is what JWB does. Our first responsibility is take care of life and people, and then it's taking care of property. Well, I can't know exactly what's going to happen with the storm, but I know that you can have great insurance in place that helps you sleep well at night. So insurance is there, and I'm so glad that Whitney Ritchie is here, our sponsor for the summit, because she is the best in the business when it comes to insurance. So she helps a lot of our clients with that. The other thing to keep in mind is, what if the big one hits you? what if the big one hits you as like a market? What does that do to home values? Well, we actually did some deeper dives on that. And what we found is that when some of the biggest hurricanes that have hit the country, Hurricane Katrina, Hurricane Andrew, we looked at home prices 1 year later. And wouldn't you know, home prices in those markets actually went up 1 year after the big one hit in those markets. And then those home prices continue to go up just like they would have for the next full market cycle as well. So hurricanes are not a reason to not invest. When you're doing your due diligence on a market, there are a lot of things to look at. I'm so glad you're here today because I'm going to be sharing one of the things you should be paying attention to when you're thinking about investing in a market. Hurricanes are not a reason to not invest. It is another natural disaster that you need to have a plan for, either with insurance. Obviously, taking care of people is the number one thing, but insurance is there to help you sleep well at night. And if the big one does come, history shows that home values stay strong and actually even go up 1 year after.
All right, great. So now that we've answered that, we're not going to turn this into the hurricane show. Let's get into the downtown show. This is the data that GC has been working on. He hasn't shut up about it, honestly, for like the last 5 days. He's like, you're not going to believe what I found in this 20+ year case study that I put together. As we're talking about this, just know this is past performance of data. Do your own due diligence. This is informational purposes only. Anything else there, GC?
We're not financial advisors, and do your own due diligence. I'm so glad you're here, and let's get on with the show.
Let's get it on. So that being said, if you want to take the next step here, you want to get on the call with a team, it is a free service to have someone build a portfolio plan for you of an outcome that you can achieve with real estate based on what you got. The sooner that you understand what you want to achieve and how to get there, the quicker you're going to get there because the mind is a problem-solving machine. So take advantage of the resources that JWB offers. Give them a call at 904-677-6777 or shoot them a text at 904-293-0341. If you just want to book your appointment right now, go to chatwithjwb.com. Pop it in there and get that call started. All right, GC, tell me about downtown cities.
So, you know, we have talked many times how investors tend to focus on the wrong things. And sometimes they obsess about the things that matter. Just, they kind of like step over the dollars to pick up the dimes. How's that go? Step over
dimes to
pick up
dollars, tripping on.
I don't know.
Go ahead.
Whatever. They're picking up the wrong thing, right?
Yeah.
All
You
right.
can ask the butcher about that.
Well done. Well done, Tommy boy. Well, I feel like there's a little bit of this going on when it comes to a lot of these cities out here, and people are saying, well, should I go and invest in this city or that city? And then even when you get to that right city, people say, well, I want to go and invest in a place next to the next big shopping center that's coming. Or maybe it's the, school system. We all love great school systems, but they say, well, I have to invest right next to this school system. Yeah. And what I try to help people understand is that, well, those things are nice. Those things, the next shopping center, right? Or maybe it's the amount of cash flow that you earn. Maybe it's $25 a month more here or there. Maybe even the next school system that you think is the greatest things. Those things pale in comparison to identifying a market where a downtown is being revitalized. And there's a lot of data to support this. So if you want to put yourself in a position to have the best return on investment, buy in a city that is undergoing a revitalization of their downtown. And so here's where I started to go down this new path. I started to look at some new and more profound data, and it started me down this path. And I hit up Pablo, and I'm like, hey man, we got to do a show about this. And I haven't shut up since. Well, look at this, right? Revitalized downtown cities have appreciated 76% more than the U.S. average since 2005. And that's coming from cities like Denver, Austin, Nashville, Tampa. I mean, look at Nashville here, Pops. Look, I think it's 225% home price appreciation since 2005, lapping the U.S., right?
Pretty good. Yeah, pretty good.
All of these cities have more than doubled their home prices since 2005, while the U.S. hasn't done that. So it's not just a random occurrence when you start to see trends like this. Yeah. But it is something that, if you're out there and you're saying, oh man, I'm only going to pay attention to cash flow. Yeah. At the end of the day, when you look at your total wealth pie, your cash flow is going to make up like this much. Yeah. Your home price appreciation is going to make up the majority of it. And the biggest driver for outsized home price appreciation in a market is a revitalized downtown.
Makes a lot of sense to me, man. It's kind of like an age-old tenet of you want to invest in a booming space. right? So like whatever the company is or whatever you're going to do it, like you want to be in the right sector, right? So like you talk to venture capital today, they're not investing in anything that isn't like super AI driven because they know that that's the big pop, right? Cloud software was a big pop. The internet was a big pop. All these different things. That's where all this like wealth gets created when all this stuff is happening. When it comes to real estate, this idea of is your downtown popping is kind of like what shows that the sector is popping, right?
Exactly.
All right, so talk me through more of this.
Well, so then I started to do a deeper dive and I said, okay, well, it's not just that these cities were shining stars before and then they sprinkled a little bit of downtown special revitalization sauce on them and then all of a sudden they became that much better, right? Take a look at these median home sales prices in these cities in 2005. What you'll see for Nashville, let's take for example, $146,900 was the median home sales price in 2005.
It's pretty affordable in 2005.
Yeah, that was a lot lower than the US average. Look at Austin in 2005, lower than the US average. And you know what? I kept Jacksonville down there at the bottom too, because we're not just comparing against the US here. I want to compare against Jacksonville. I want to see where does Jacksonville stack up. Take a look at this. Nashville, Austin, Tampa, all had lower home prices in 2005 than our very own Jacksonville.
Yeah, lower than Jacksonville. So it's not just like a de facto thing that just happens.
No, it's not. And if you were looking at any of those cities in 2005, along with Jacksonville, and you said, which one is about to blow up? You might have said Jacksonville is more in line to do that than Nashville, Austin, Tampa. They clearly weren't, they didn't have anything special about them that said these were going to be the next shining stars. But look what happened now in 2024. Look at their home prices. They went from way below the US average to way above the US average. I mean, look at Nashville. It was 49% below the US average in 2005. Now it's 16% above the US average. Yeah. Right? Same thing with Austin, went from 36% below to 5% above. Tampa, very similar, right? I threw Denver in there as well because Denver has always been priced above, well, as long as I went back, it's been priced above the US average. Yeah. But look, it exploded from being only 10% above the US average to 53% above the US average. Again, another successful downtown revitalization. So you start to see example after example after example, and you start to really pay attention. This is why I bring it to the show, is because I want you to pay attention on the best way for you to put your dollars somewhere and for them to passively grow in a very, very large amount, right? Got it. Successful downtowns are that thing you want to hit your wagon.
So this isn't, I look at this and I'm like, I could have seen all four of these cities and thought, man, these are kind of like secondary, tertiary market cities with a lot of potential. People like living there, high quality of life. De facto, it's all going to work, but no, not the case, right? Like at the end of the day, Jacksonville hasn't popped while these other ones have popped. And so there's got to be more to look at than just like market size. It's a good deal. It's got, like a certain quality of life or whatever. Right. So how do we identify, like, how do we identify if we are, if Austin and Nashville already popped, how can we identify that Jacksonville will actually like go through this thing?
Well, I'm so glad you asked, right? There are key indicators that you can tell year in advance, right? This doesn't happen overnight. It takes years, which is a benefit for all of us, because if you know what to look for, you can take advantage at the early stages. And so that's what I want to show you here. I'm actually going to break down Jacksonville versus, we're going to start with Austin, and we're going to look, what did it look like before the raving success story that we've had in Austin, so that you can start to see, especially if you're going to be here at Summit, and say, oh, wow, do I see the same characteristics in downtown Jacksonville? And if you do, you should be buying and holding now.
All right, show me the data, GC.
All right, let's do it. So Jacksonville versus Austin versus the US. Okay, this is, again, the median home sales prices, but just to put some color to it, Austin's home prices were 7% lower than Jacksonville's in 2005. And by 2024, Austin's home prices were 29% higher than Jacksonville. So something happened, right? Well, let's look at what that something was. The first thing you want to start to look at are the number of residents that are living downtown. And the reason this makes sense is because as more people start to live downtown, more companies think of that downtown and that city as a talent incubator. So more jobs come. And when more people are living downtown and more people have jobs that are located downtown, more amenities come downtown. And it creates this wonderful word that you love.
You
What's
know,
that word?
I do the
What's the word?
economic development flywheel.
Flywheel.
As you improve properties, the neighborhoods get improved. That brings amenities, that brings jobs, that brings higher median income, that brings more and more investment into the area, and the flywheel spins and spins and spins.
There you go. It creates this beautiful, beautiful cycle here. But let's go back and look at Austin all the way back from 1990. I found some really great data going back there, right? 1990, Austin had about 4,000 residents. Jacksonville had less than 1,000. There was no data I could find there, but I saw that we had about.
This is downtown Jacksonville.
Yes.
Yes.
Yes. Sorry. This is just downtown,
like,
not
wow,
overall.
man, yeah.
Yeah. So really nothing going on downtown in 1990. 2010 in Austin, certainly things were starting to move, right? They were starting to get the downtown public and private partnerships. Downtown started to have a voice, right? In downtown Jacksonville, we have the Downtown Investment Authority. That's our voice for downtown. Well, it wasn't always that way. And the same thing happened in Austin. They started to put incentive programs together to get more people to move downtown, more companies to move downtown, and more restaurants to open downtown. By 2020, their population grew 79%. They crossed this really important threshold as far as the number of people living downtown. What's that threshold, Pablo?
10,000 residents.
10,000 residents.
That is the magic number of when developer incentives go away, right? Like when you want to develop a great downtown, you want to have what's called mixed use development. That means that there's commercial downstairs, people living above it. Why that's really, really important is because if you want people living there, you got to have the amenities to have it, the things that they need. And if you want the things that they need, you need people living there for people to want to do it. Once you cross before 10,000 residents, the public sector often incentivizes development because they got to make it worthwhile for the businesses coming downtown. Once you get that critical mass, now, the anchor tenant, that person that's like at the bottom of the mixed use development, that's going to be your big tenant, like a Target, like a Whole Foods, those kinds of, like a movie theater, right? Like those types of like big scale things that draw people in and people want, they start saying, oh, no. Yeah, we want that space. We're ready to cut the check. You don't have to do it, Mr. Developer. Yeah,
it is a model that successful downtowns have followed. Somebody who is in leadership in Austin around, call it 2010, was modeling other successful downtowns and said, "Hey guys, we got to do this." They got the public, they got the private partnerships together and said, "We got to do this," and it worked. And by 2020, they had about 14,000 people live downtown and continues to grow now in 2024, over 15,000 people living downtown. But look where we are in Jacksonville. We're at about 7,600 folks living in downtown. This is as of the middle of 2024.
Almost 1-to-1 of 2010 Austin.
Eerily similar, right?
Interesting. Yeah.
So this is the jumping off point for Jacksonville to take that next approach. We've talked a lot about, and we've had folks on the show like Mayor Deegan, we've had Lori Boyer, we've had Brian on the show. We've had all these folks who have talked about the power of public-private partnerships and the strategic incentive programs that are bringing people to downtown, both people living downtown, employers coming downtown, and then restaurants and amenities opening downtown. Well, this is the case study for us being, call it roughly 10, 15 years behind Austin. You can start to see it in the downtown residents number.
You forgot one person that talked to public-private partnerships since day one. Your boy Pablo over here. He's all in on public-private partnerships. All right, so this happens, right? Now we talk about the economic flywheel, right? Once people start coming in downtown, what happens, GC?
So what the beautiful thing is that everybody can win in a downtown when it becomes revitalized. Quality of life can go up. And one of the great ways to measure quality of life is household median incomes. So if this is all working the way that it's supposed to, you're going to see home prices go way up. You're going to see rent prices go up, but people can afford it because median incomes also go up. And that's what we saw in Austin, Texas. If you go back to 1990, right? Austin was just like the US, same as Jacksonville. Well, in 2010, it started to separate itself a little bit, somewhere around there. Look what happened from 2010 to 2020.
Yeah.
A huge leap. The median income in Austin grew 48% from 2010 to 2020. And the US average was 35%. So it outpaced the US average. And from there, it has continued to go up. The median income now in 2024, almost $100,000 in Austin.
Yeah. This is cool, man. I understand why you haven't shut up about this, right? Like seeing this trend of like these inflection points where you can map it to residents in downtown, followed, like as the signal that then is followed by the noise of median incomes going up, and starting to see this in a visual way is really, really interesting, right? So like if we look at it now, right, they've gone way up, right? It's almost like 20% more over here above actually more than 20% more above the US average. Jacksonville's just slightly above it, right? Kind of like how Austin was just slightly above it in 2010. So one could think that right now that we're just slightly above it, reaching this threshold, we could also follow that path.
Exactly. And median incomes are so important. The type of income that's driving it is so important because that's how you have stability and sustainability for housing prices, and that's how they can remain affordable. So it's an incredibly important quality of life and long-term success metric. And if we go back to that slide just real quick, when I was looking at the data, I look at Jacksonville's median household median income of almost $83,000. And guys, up to date, our downtown has not gotten itself together yet.
Yeah.
Right. But look, we're already above the US average. We're doing a lot of great things from an economic and median household income perspective in Jacksonville without the bang of the revitalization of downtown.
Second most Fortune 500 headquarters in Florida.
Number one for corporate relocations.
Number one for
any major
relocations of any major city. The financial sectors that we count on are very high paying, stable financial sectors, meaning healthcare, finance, fintech, logistics, right? Like all things that are highly sought after jobs that are not going anywhere and pay really well. And just getting started. So I kind of teased this on the slide before, but up next is the comparison to Nashville, right? If we're kind of like on the skirts of Jacksonville, tell us about how we're on the skirts of Nashville.
There we go. So similarly, the same type of case study. Let's look at where we were in 2005 to 2024. And guys, like Nashville is the shining star. Right? If you could put your money in any city 20 years ago, you would probably say, I want to go and buy up everything I can around downtown Nashville.
Yeah.
Right?
Yeah.
So let's look at what has happened and let's look through the same lens of, okay, home prices went way up. We can see that here. What did it look like for residents? Residents living downtown? What did it look like for median incomes? And let's see how Jacksonville stacks up.
All right, let's check it out.
So we went back and key inflection points, the year 2000, 2010, 2013, 2017, 2024. And we were able to map the number of residents living downtown versus Nashville and Jacksonville. So looking at, the year 2000 was kind of roughly the same in downtown Nashville, downtown Jacksonville, not a whole lot going on. 2010, things started to kind of move. 2010, 2013, things really started to move. From 2010 to 2013, the population in downtown Nashville increased roughly 50%. So around that time is where we sort of are now in Jacksonville. Again, public-private partnerships started coming together. Somebody in Nashville probably went and toured other successful downtowns, probably went to Austin, talked to those city leaders and said, how did you do this? They put incentive packages together that made it really attractive for businesses to move downtown and for people to move downtown, and created this word, which is the most famous word that Pablo has
made famous. Someone in the chat.
Your favorite word of all time starts with an F?
Flywheel.
There we go. The flywheel started, okay? In 2017, Nashville hit that threshold, 10,000 residents. And look what has happened since 2017 in Nashville as far as the number of people living downtown. 20,000 people living in downtown Nashville right now.
Doubled up real quick, man.
It happens fast.
Yeah.
That's the other part of this, is you don't want to wait until after you see all the beautiful things happening in a downtown, because when other businesses, other employers, other amenities start to see that next city is the next place to come and they don't have to get incentive dollars to make it work, they're there. and it happens very quickly. And then look at Jacksonville, right? Very similar to where Nashville was in 2013.
In 2013. Yep. Right now, eerily again, same, very similar numbers of 2013. So that is residents, economic flywheel, means then income goes up, right?
Income goes up. Income goes up. A lot that I sort of looked at here, and I'll give you a couple of different perspectives. Number one, income grew more in Nashville than the U.S. average, and it grew more than Jacksonville's as well from 2010 to 2017. So that period of transition from going to really a no-name downtown to the downtown, to a talent destination. But look at, you see that final number there for Nashville in 2024?
Yeah, it's pretty surprising that Nashville's economic kind of like thing has topped off and we're catching up with median incomes, right?
You know, for a downtown that has 20,000 people living downtown and home prices, which are way high and have been a huge success story in terms of growth from an investor perspective, I was surprised that Nashville actually has a lower median household income than Jacksonville does.
Yeah, I guess if I look at Nashville, right, and Nashville as I know it's like I talk a lot about Miami, right, but this is what I grew up in, and I see, you know, Miami's like when I grew up there, it was like the party town for like out of towners kind of things, right, and people living there, and Nashville's kind of become that, right? It's become this place that people go there. It's like the #1 bachelorette party destination. It's this like place for like live musicians and stuff like that. It's a lot of hospitality jobs, a lot of entertainment industry jobs, those kinds of things that I don't really equate with this like super rock solid, high wage and like stable economy type stuff like finance, healthcare, and logistics.
Exactly. There is beauty in call it the less sexy jobs that are high-paying jobs that are incredibly important to our economy, right? Shipping, logistics, healthcare, finance, right? Those are the jobs that we have in Jacksonville. That we don't get a whole lot of tourism relative. We don't get a whole lot of bachelorette parties in Jacksonville relative to.
True. I don't think I've ever been on a flight with somebody going to a bachelorette party in Jacksonville. Every time I fly to Nashville, there's 3 on the plane.
Who knows? Maybe some point in the future here. But the reason that's important is because sustainability and affordability of your investment. If you're an investor in Nashville today, you got to be really concerned about how much more can home prices go up, simply because median incomes haven't risen at the same rate or even close to what home prices have. In Jacksonville, again, our median incomes have actually done quite well, even though we haven't got our downtowns act together, let's say, as a general statement. That's coming. So a great foundation for growth. With our median incomes going up and doing what they did.
Got it. So again, we see the trend. We see the trend of when downtown tips, median incomes going up, and this idea that we also know that home prices went up at the same exact time. So as a real estate investor, you want to think of like, what is that inflection point where I'm early, but I don't have to be too early, right? And it looks like all of these kind of like eerie numbers that look just like the tipping points of Nashville and Austin seem to be kind of like the moment in time. But what is Jacksonville downtown currently doing? Like, what is the way that you guys see it?
Well, here's JWB's and thesis on the Jacksonville investment opportunity. We believe that we are 10 to 15 years. We are where Austin and Nashville and these other successful downtowns were 10 to 15 years ago. And it's very clear that when you make a decision to invest in a market, you don't want to be late when it's a downtown revitalization, for sure, because you could be investing in Nashville today. And Nashville might be a place to invest, but it's surely speculative. Now, there's no way you're getting cash flow. And so, but it is, you know, some folks can be way early. There's not a downside to being way early, but it really feels like right now is that tipping point where we had about 7,500 residents living downtown, which is where, you know, Nashville was in 2013. And from 2013 to 2020 or 2017, I can't remember, that's when things really popped off. So how close do you want to try to time this to the point where Jacksonville really explodes? It certainly makes a whole lot more sense now that we see this pattern happening. buy and hold in the next market that you think is undergoing a revitalized downtown, because you're setting yourself up for these types of exponential gains and a much better return on investment while it still can be risk mitigated. That's the other thing.
Yeah. Tell me more about that, because I'm getting a lot of questions here. It's like, are you saying that people should be investing in downtown Jacksonville right now?
I'm so glad. I'm so glad you asked that question. Risk mitigation is the other part of this, right? Our thesis is not to go in and buy a building downtown Jacksonville. There's really not a whole lot of rental inventory anyways in downtown Jacksonville.
Yeah.
But even if there was, I would not advocate for you to go and do that. And the reason is because if you do that, the prices are a lot higher than what the rents are. And you're going to be cash flow negative to the tune of hundreds, maybe thousands of dollars a month by buying a property in downtown Jacksonville. And that's just a residential property.
Yeah.
You want to buy a commercial property in downtown Jacksonville, be prepared to take on a ton of risk and have very deep pockets and have to understand how incentive programs work and all of these things. So the thesis is not for you to go out and buy in downtown Jacksonville. The thesis is for you to buy single family rental properties surrounding downtown Jacksonville, because you get all of the benefits, the indirect benefits of that downtown popping, that downtown growing, median incomes growing up, people living downtown, and then home prices for the market going way up without you having to take the risk. Because investing around downtown right now still allows you to buy properties that are cash flow positive. You can buy 3, 5, 10, and they're going to be putting money in your pocket every single month while you're waiting for some time period, 1 year, 3 or 5 years, 10 years for downtown Jacksonville to really reach its full potential.
Got it. So, we have talked about this before. It's this idea of cash flow being risk mitigation. If you're investing in downtown right now, it still hasn't crossed that 10,000, person threshold, but it's on its way, is what we're saying. So you can invest, like I have, like many of the folks here on the show have, in these single family homes that are workforce housing that feed the workforce that is benefiting from this raised median income, all these different things that are moving closer and closer to using downtown as an amenity, do all these things, and right now you can profit from it. And not just as a risk mitigation, it's also easier to get in, right? Like, to get into a downtown property right now, you're coming out of pocket a lot, whereas to invest in a single family home around downtown, it's like 50 grand, right? Exactly. So let's talk about if you're doing that, then you got to be counting on people doing the investing in downtown. That's not you, right? So let's talk about those numbers.
Yeah, so here is the case for downtown Jacksonville's resurgence, right? What are the leading indicators that help you see that downtown Jacksonville is growing and is becoming the next Nashville? Well, there's a few things that we can take a deeper dive on. One is how many development projects are going on right now.
Yep.
And guys, last year when I shared this information with you, there was $4 billion of active construction going on for development projects in little old downtown Jacksonville. And I have gone to as many state of downtown reports as I can find. I've gone and toured other successful downtowns. I went and I toured Washington, D.C. while I was there with my family. I checked out their state of downtown report. They had $1 billion of construction going on in a super successful downtown in Washington, D.C. I can't find another downtown that has anywhere close to $5 billion of construction going on right now.
So we can count on money going into downtown to fulfill this promise. I just want to say a couple of things for scale. One is, if DC has $1 billion in construction happening in downtown, we just added that from last year to this year in investment in downtown. And there's a really interesting graphic that I thought that I heard of recently. But if you were to stack $1 million in, I think it's $100 bills, it would be about yay high. Right? It's like this tall. If you were to stack $1 billion in $100 bills, it's the height of the Empire State Building.
What?
Yeah. So we throw around these big numbers like billions, right? Yeah. But the difference between $1 million and $1 billion is 1,000 fold.
Yeah.
Right?
That's crazy.
So just adding $1 billion in pipeline year over year is a giant trend of this thing is happening. The big money is rolling in. Our ability to like get alongside the big money and put our chip at the same table. It might not be that you can put $500,000 into like some syndication investment in downtown, but you can definitely pick up 1, 2, 3, 4 properties that will have that same kind of like growth opportunity with the cash flow, with the risk mitigation already handled by a company that's proven to be able to do it.
100%.
All right. So let's talk about population.
And let's look at population growth, okay? So again, mirroring our thesis here that Jacksonville is what Austin or Nashville was 10 or 15 years ago, right? Our population has grown 50% in the last 5 years, right? Sort of what Nashville's did, right? Well, we're starting to see that people are buying into the theory of, I want to live downtown, even before all the beautiful amenities are here. And the resident population in downtown Jacksonville is expected to cross the 10,000 threshold, 10,000 person threshold, sometime 2025 or maybe 2026. And you know what? One of the projects we're going to get to see as a part of Summit is we're going to see the Pearl Square district, which is the first major development led by Brian Mull and Gateway Jacks, of which JWB is a sponsor of Gateway Jacks. So guys, I think it's really possible that our investment, right? Yeah. The Gateway Jacks investment might be the project that actually crosses the 10,000 person scale.
The tipping point project.
Man, that would be so cool.
That'd be really cool. So just something to think about, right? As I'm looking at what we showed in Nashville in population size, right? It tipped 2017. By 2024, it was double that, right? And that's essentially what this thing is predicting, right? It's predicting that it tips in 2025 and 5 years later to be double that, right? So if we want to, again, draw these same conclusions, it does feel like this is the ramp up moment. This is when it's really, like we call it, the curve bends, right? Yes. Like we've had this like historical 5% appreciation rate. The curve likely bending from henceforth is a good one, and getting in and owning these properties before that happens, before everybody else understands it, is kind of like the stock tip of the year kind of thing, right?
That's the way we think.
So we talked some about this idea of investing in downtown versus, and again, this is the point that we made, investing in downtown versus investing in these properties surrounding downtown GC. Why don't you just describe what these single family home properties look like?
Yeah, absolutely. There's so many things to love about investing in single family rental properties. You just remove so many barriers to entry, right? Let's just think about this. This is not for only accredited investors. If you start to invest in other things, like you want to actually invest in a downtown building, most of the time you have to be accredited to do it. This is the perfect investment for the everyman and every woman, which is part of the reason why I love this investment so much. The minimum investment is a whole lot less for a single family rental property like you were talking about compared to other options out there. For a JWB property, think about maybe $50,000 at the bare minimum. And it can go up from there. I would say somewhere around $75,000 is more average. More in line with the average, but you should talk to our team. And if, of course, if budget is something that is the one thing that's holding you back, talk to my team of experts. We've helped thousands of folks overcome budget challenges to be able to get those investment properties.
Getting interest rates at 5.65%, you see, this is not standard, right?
This is not standard. No, we're seeing a lot of chatter out there about interest rates, of course, with the Fed's moves or lack of moves, and with inflation and whatnot, our interest rates in the general investing world are a lot higher than what JWB clients are able to get. And this is one, because of our relationships with our lenders. And then number two, it's because of the incentive packages that JWB is offering as well. So yes, our clients have recently closed at 5.65%.
Love it. And there's some incentives being offered right now, right?
We do have some really great incentives. And again, this is in line with celebration of Summit as well. So it is by design that these incentives will be here, especially on the Friday that you are coming for Summit, Friday, February 28th. But guys, we have up to $13,450 in incentives. And some of this is available on every property you purchase. And then some is special depending on how many you purchase. But on every purchase, from now through February, the end of February, you'll receive $4,000 to $6,000 in JWB maintenance credits. And what this simply means is This is a property management incentive, which just means that your first statement, JWB sends you a check for $4,000 to $6,000 that you can set aside to handle that first $4,000 to $6,000 of maintenance cost, which as you hold on to these properties for a full market cycle, guess what, guys? You're going to have maintenance at some point. So consider this as JWB taking care of that for you. And you get a check. You really do get a check. You get in your first statement after you close with JWB. You also are going to get a waived initial tenant placement fee, something you didn't even get.
I did not get
You didn't even get that.
I'm not.
I feel bad.
I'm not.
But I
I'm
feel
not
okay.
gonna feel bad about it
because you've made over 100.
Because I'm doing pretty good with it. I'm doing pretty good with it. Yeah. Yeah.
But for anybody who purchases any number of properties here, 1, 3, 5, there's no limit. And there's no minimum. You'll get your first tenant placement fee waived. That's a $1,450 value on average. And then for those of you who can purchase 3 or more at one time, there's a huge value to doing that. You'll also get an additional $4,000 to $6,000 of incentives, and you can put these towards your closing costs on your properties. You can buy down your interest rate with it. There's some flexibility there, but guys, over $13,000 of incentives. And guys, I just hope you take this message to heart. Everything that we are sharing, I don't think we have ever, I'm just going to say it, I don't think we've ever made it as clear as the slides hopefully made it today, that now is the time, right? If you want to take advantage of an investment that is set to grow, that's also risk mitigated, and you want to know when the time to do it is, you want to invest in a revitalized downtown city, and you want to do it right before it starts to get to that 10,000 threshold of residents.
And in a time in the world where everything seems so uncertain, to go into like the most risk mitigated asset class, which is this like workforce housing in a growing city, by an operator that's been there for 19 years, that's investing alongside of you, that's going to give you cash flow day one, that has the fastest growing median income of, like in the state, and all these corporate relocations with these incentives, with this like next level tip on data of, hey, this is before the going gets good and everybody figures it out. It just feels like it feels like the ultimate kind of just like, here you go, silver platter. Like I love this data, man. Like what you just came up with of like setting the path of like what the inflection point was, and just how like it was. I can't get over how close the number was to Austin, how close the number was to Nashville before the curve bent in either one of them. Feels amazing, man.
Yeah, man. And I just think, listen, everybody that is selling properties in their own market is going to be biased towards one thing, but I don't believe there is any other market out there that has data like this, right? Like if you're considering where to place your investment dollars, listen to this, take this in, take down these data points, and then go do the research on these other places too. Yeah. And then also do the research on the person who's selling you the properties. How invested are they? Yeah. Right? How do they own rental properties? Yeah. Right? And then, obviously we own about 400 rental properties, so we're very invested here. But we're very, very invested in downtown Jacksonville as well. Yeah. We're an early pioneer. Yeah. And others don't have to be an early pioneer anymore, right? Yeah. You can be, I don't know, what's the next stage from pioneer? Early adopter? Early adopter. All right. Yeah. Now it's an early adopter phase for Jacksonville.
Pioneer, early adopter, early majority.
Yes.
Yeah.
Cool. But, JWB has invested over $68 million of our own money just in downtown projects, because we believe in it, because we're going to be here forever, and because we all can win. Our residents can win, our clients can win, JWB can win in the long haul as well. So I just, I can't be quiet about it because I'm so passionate. I believe it so much. So
it's a hell of a tip, man. All right. Do you want to answer some questions here?
By
the way, great job putting this stuff together.
Thanks, man.
Really good stuff. Let's answer some questions here. So Anonymous Day says, does proximity to downtown have an impact? Like, is the downtown an epicenter, and as you move out, there's like bands of appreciation?
No, not that I could find any data to support, right? The data that I pulled for those other successful downtowns are MSA data. So the entire metropolitan statistical area, another way of saying city. Yeah. So no, it's not like you have to have bands. And all of JWB's properties are, 5 to 15 minutes of a drive.
Are within one band.
Yeah, they're all within one band anyway. So
yeah. If you look at like the plot distribution, I lost that link on my Google Maps, but there's a plot distribution where you see the dots and they're all JWB properties, all 6,000 of them. And it looks like here's downtown, a little tiny hole, and then just a green blob all the way around.
Enveloped by it.
Just very, very dense, right? So whether there's bands or not, you guys are the red part of the bullseye and the green part of the bullseye on a dartboard. All right. The Maven from the mountains of Denver, Leslie Wilson asks, since Jacksonville has a large military presence, do you see any dramatic impacts from the current federal government downsizing efforts?
Haven't heard anything. I think it's worth certainly paying attention to. I think there's a lot we're all going to find out a lot as some of these things come to fruition and some don't. Yeah. So certainly something to pay attention to, but haven't read any articles about it. Haven't had any conversations with other city leaders or whatnot about it at the moment. So we'll continue to keep you updated if we do.
Sheikh Ahmed is asking, Sheikh, I don't know if I'm saying your name right, if it's Sheikh or Sheik. I'm just giving it a go here, buddy. Let me know. What is the vacancy rate of your 400 properties? So Gregg has 400 properties, and then JWB has 6,000 properties that it serves. Do you know the vacancy rate on your 400 properties?
Yeah, about 4%.
About 4%. And the 6,000 properties?
Well, it's about 4%.
About 4%.
I lumped it all together there. Industry right now is about 8 to 10% as far as residential vacancy. Yeah. So we're at 4%, so we feel pretty good about it.
Okay. And that is proprietary data, not industry data. That is data straight from the investor's mouth. Chris Gonzaga from the illustrious Hudson Valley says, has the Jacksonville airport started its expansion project yet?
Yes. If you fly into Jacksonville Airport to be a part of Summit, you'll see that Concourse B is starting to be, built out. For the longest time, we've had Concourse A and Concourse C in Jacksonville Airport. We had no Concourse B. So now we're developing.
We've had some good food options inserted lately. I'm a pretty big fan of that. I've been flying a lot these days. All right. The Shaman says, when is JWB's office moving to downtown?
Yes, and we're going to get to walk by JWB's new office downtown. So if you want to know how invested we are, it's not just the amount of money that we put into this. We are actually moving our corporate headquarters to downtown Jacksonville. We're going to have a building, a 12-story building. We already own it. We're just renovating it, but it's going to be a 12-story building. It's going to say JWB's name here. And I just think that there's no other stronger statement for how much you believe in downtown and believe in the city than having your own building. So we're going to get to share all that with you at some time in the near future. We're actually going to be moving into our offices probably Q1 of next year, maybe Q2 of next year. But for everybody like Nadeem who's coming on the tour, we're going to walk by the building, may even be able to get you a little bit of a sneak peek about something.
A sneak peek in there, which is a little teaser from old GC who keeps it close to the best. All right. Gerard Wendling, I think, joined us a little bit late. He's got a couple questions here. What percentage? So he's saying, first of all, how many doors units are downtown? What percentage are filled? How many are under construction? And what's projected to be built in the next 10 years, Gerard? So let me just kind of show this graphic and I'll let you kind of talk through that, GC.
Okay. So we're talking about downtown residential units.
How many doors, right? We keep talking about residents, right? So like I know that we're in in the 9,000 residents area.
I put that slide together and I deleted it right before here.
You did put it together.
I think we've got I'll get the numbers for you.
Yeah.
I've got the numbers. I don't want to just shoot from the hip.
Do you know percentage occupancy, stuff like that?
We're talking about percentage occupancy of just downtown?
I think so.
I don't have percentage occupancy.
That did not sound like you knew the answer.
I don't, but you know what? All of it's right here. I tore this thing up. This is the state of downtown report. So Gerard, I'll have the team get back to you. I'll have the team share that answer with you.
Yeah, you can also Google State of Downtown 2024 Jacksonville, Florida report, and you can find all that information, Gerard. So that'll give you some really good stuff right there. Whitney Ritchie, the original Flo from Progressive, has a question. But are you going to talk about our relocation downtown? Are you going to keep the studio, aka the NYAIS studio, in my old office / same studio location? LOL.
Man.
What does she mean by that, GC?
This used to be Whitney Ritchie's original office. We were sitting in it right here.
It's true.
We have been so blessed to have Whitney as a partner of ours forever.
Yeah.
And she has grown her business alongside with JWB. And we, You know, we loved being roomies with her for a while, but her business grew so much, we all grew so much that she eventually had to move out and has another beautiful office.
One of the many stories of JWB being like the first adopter client incubator that helped Whitney establish her business here and then grow it beyond belief as like the category queen of insurance here in Jacksonville. I'm one of those case studies as well with my business. Whitney holds the record for being an investor, a vendor, a tenant. What was it? She has like multiple things that's like people are investors. People are
a property management client as well.
People are property management. Yeah. Whitney has interacted with all
lender.
And she's a lender. Yeah. Whitney hits for the cycle on all things, right? Because she's the only one that's also been a tenant apart from all these other things. So good stuff. GC, good work putting this together, buddy.
Yeah, man. Thanks for the drive. Thanks for throwing the gauntlet out there. I appreciate it.
I expect big things from you, GC. I expect big things from you at these shows. I expect big things from you in the summit. It's going to be good stuff, man. I'm excited to see everybody in just 10 days.
I'm ready.
You know what else I'm ready for next week? You know what's going on next week on Tuesday?
What's that?
Fan appreciation show.
Oh man.
Yeah. It's going to be great. We got a bunch of surprises for the fan appreciation show. So we're going to be seeing it from your perspective, right? What are the lessons that you've learned? You're going to meet some of the people that are coming to Summit. You're going to meet some of the people that couldn't make Summit this time, maybe. But it's a love fest ahead of Summit on Tuesday. So super excited for that. Any last bits of advice for folks before logging off here?
I do have some.
You know what? I forgot to say. We had like 100 people on today.
That's awesome.
We have this new standard of like 100 folks showing up every week. And it's just like, we started at 6, man.
Yeah.
Like we're going to our 4th summit. We started at 6. It's just never take for granted that you spend an hour with us here. Thank you for making this show so awesome. Thank you for the great questions. Thank you for being open and honest in the community, giving each other advice. So just really, really appreciate you. And now the final piece of advice, don't be average.